Imagine waking up tomorrow morning, walking to your local bank and finding the doors locked. There is a line of 200 people outside. They are screaming, they are crying. You force your way to the ATM, insert your card, and see a message that freezes your blood. Withdrawal limit $50. You check your balance on your phone. The numbers are still there. Your life savings, $50,000, maybe $100,000, is showing on the screen, but you cannot touch it. The bank manager is hiding in his office. The police are on their way to protect the building, not you. This isn't a dystopian movie. This happened in Lebanon just a few years ago. Doctors, engineers, and teachers saw their entire life's work evaporate, not because the money disappeared, but because the trust disappeared. Within months, their savings lost 98% of their value. They became paupers while still being millionaires on paper. Now, fast forward to today, January 2026. Look at the United States national debt clock. It just ticked past $38 trillion. The interest payments on this debt are now higher than our entire defense budget. The system is flashing the exact same mathematical warning signs that flashed in Beirut, in Weimar Germany, and in Rome before the fall. The government is telling you the economy is strong. The stock market is telling you everyone is rich. But the math tells a different story. The math says we are mathematically insolvent. When the music finally stops, and it always does, 99% of the assets you own today will go to zero. Your savings account, zero. Your bonds, zero. Your pension, gone. But throughout 5,000 years of economic history, there are 5 specific assets that have survived every single collapse. While the masses are wiped out, a small minority of people don't just survive, they get richer. Not because they are lucky, but because they hold the only things that cannot be printed, debased, or locked behind a bank door. Today, we are going to open the survivalist's portfolio. We are going to look at what you need to own to make sure that when the doors lock, you are the one holding the keys. To understand why you need to build a survival portfolio, you first have to accept a brutal truth. The money in your pocket is not money. It is a promise. And in 2026, that promise has been broken. Every currency collapse in human history, from the Roman denarius to the Weimar mark to the Venezuelan bolivar, follows the exact same 5-stage script. It is never different. Stage 1, the government spends more than it earns. Stage 2, they borrow to cover the difference. Stage 3, the interest payments on the debt become too high to pay. Stage 4, they print new money to pay the old debt. Stage 5, complete loss of faith and hyperinflation. Where are we right now in January 2026? Look at the scoreboard. The United States national debt has just crossed $38 trillion. But the terrifying part isn't the total, it's the interest. Because interest rates have stayed higher for longer to fight inflation, the U.S. government is now paying over $1.8 trillion per year just in interest payments. That is more than we spend on the military. It is more than we spend on Medicare. It is the single biggest line item in the federal budget. This creates a doom loop. The government has to borrow more money just to pay the interest on the old money. But borrowing more increases the debt, which increases the interest, which requires more borrowing. It is a mathematical death spiral. So what is the end game? The government has only 2 choices. Option A, default. Tell China, Japan, and the American pension funds that they aren't getting their money back. This would cause an instant global depression. Option B, print. The Federal Reserve creates trillions of new dollars out of thin air to pay the bills. History tells us they always choose option B because printing is invisible. It doesn't look like a default. It looks like stimulus. It looks like quantitative easing. But make no mistake, it is theft. When they print trillions of new dollars, the dollars in your savings account don't change in number. You still have $10,000, but the value of those dollars is diluted. It's like pouring water into a fine wine. The volume increases, but the quality is destroyed. This is why your grocery bill is up 40%.
It's not that the food is becoming more valuable, it's that your currency is dying. Statistically, the average lifespan of a fiat currency is just 27 years. The US dollar has been a pure fiat currency since 1971. That's 55 years. We are living on borrowed time. We are statistically overdue for a reset. Most people think holding cash is safe and buying assets is risky. In a normal economy, that might be true. But in a sovereign debt crisis, which is what we are facing in 2026, cash is the riskiest asset you can own. It is the only asset that is guaranteed to lose purchasing power every single day. The people standing in line at the banks in Lebanon or Germany didn't lose their money because they made bad investments. They lost it because they trusted the currency. They believed that cash was a store of value. They were wrong. So if cash is the burning building, where is the exit? When the currency dies, wealth doesn't vanish. It transfers. It moves into assets that cannot be printed by a politician or frozen by a banker. This brings us to asset number 1. It has been the king of wealth preservation for 5,000 years. Governments hate it, central bankers hoard it, and in 2026, it is preparing for its biggest move yet. If you look at the last 100 years of economic collapses, one asset stands alone as the undisputed king of survival. Let's go back to that Berlin bakery in 1923. If you had kept your life savings in German paper marks, you lost 100% of your wealth. You starved. But if you had converted those paper marks into just 1 ounce of gold before the crash, you didn't just survive, you thrived. By the end of the hyperinflation, that single ounce of gold could buy an entire city block in downtown Berlin. Why? Did gold become magical? No. Gold didn't change at all. It sat in a drawer and did nothing. What changed was the paper. The currency collapsed against the gold. This is the secret that Wall Street doesn't want you to understand. Gold is not an investment. You don't buy gold to make money. You buy gold to ensure that you have money when the system resets. It is the only financial asset on earth that is not someone else's liability. If you hold a bond, that is the government's debt. If you hold a stock, that is a company's promise. If you hold cash, that is the Federal Reserve's IOU. But if you hold a physical gold coin, you don't need anyone to pay you back. You don't need a CEO to report earnings. You don't need the government to remain solvent. It is pure store of value. Now, let's look at January 2026. If you listen to the mainstream media, they will tell you gold is a pet rock. They will tell you it has no yield. They will tell you to buy tech stocks instead. But watch what they do, not what they say. For the last 3 years, global central banks, led by China, Russia, India, and Turkey, have been buying gold at the fastest pace in recorded history. They are literally draining the vaults of London and Switzerland. Why? Why would the most powerful financial institutions in the world be hoarding a pet rock? Because they know what is coming. They know the $38 trillion debt creates a mathematical endgame where the dollar must be devalued. They are front-running the collapse. They are trading their dying paper dollars for hard assets before the public wakes up. In Turkey, late 2024 data showed that gold deposit accounts doubled in a single quarter. The citizens saw the lira collapsing, and they didn't wait for the government to save themselves. They moved to gold. But here is a critical warning for 2026 investors. In the initial phase of a crash, what we call the liquidity crunch, gold prices might actually drop. In 2008, when Lehman Brothers collapsed, gold fell 30% initially. Why? Because hedge funds were panic selling everything just to raise cash. The amateur investor panics and sells his gold at the bottom. The professional investor knows this is the fake out. In 2008, after that initial drop, gold rallied 166% in the next 3 years. In the 1970s stagflation, after an initial dip, it surged 440%. The pattern is identical every time. First, the deflationary shock, everything falls. Then the money printing response, gold skyrockets. So, asset number 1 is physical gold and its little brother, silver. It is your insurance policy against the stupidity of politicians. It preserves your purchasing power from one currency regime to the next. But gold has one major problem in the 21st century. It is heavy, it is hard to hide, and if you need to cross a border quickly to escape a collapsing regime, carrying 10 kilograms of metal in your backpack is a death sentence. It sets off metal detectors. It can be seized by customs agents. In 1923, you couldn't digitize your wealth. In 2026, you can. This brings us to asset number 2. It performs the same function as gold, but it moves at the speed of light, and it exists entirely in your head.
Gold is the king of preserving wealth, but it has one fatal flaw. It exists in the physical world. Because it is physical, it can be found. Because it can be found, it can be seized. In 1933, President Franklin D. Roosevelt signed Executive Order 6102. It made it illegal for U.S. citizens to own monetary gold. If you had a safe full of gold bars to protect yourself from the Great Depression, the government forced you to turn them in for paper money. If you refused, you faced 10 years in prison. Now, imagine a crisis in 2026. You are trying to flee a collapsing jurisdiction. Maybe it's a war zone, maybe it's a failing state like Lebanon. You try to board a plane with $100,000 worth of gold. That's about 1.2 kilograms. The airport metal detectors scream. Customs agents seize it. You are left with nothing. This is where asset number 2 changes the game forever. Bitcoin. I know what you were thinking, but Bitcoin is volatile. It crashes 80%. Yes, in dollar terms, Bitcoin is volatile, but in survival terms, you need to change your perspective. Volatility to the downside is bad, but volatility to the upside is the only way to outpace a currency that is hyperinflating. But the price isn't the point. Censorship resistance is the point. Bitcoin is the first asset in human history that can be transported across any border in any amount without anyone knowing you have it. You can memorize 12 words, your seed phrase. That's it. You can burn your hardware wallet, destroy your phone, and walk naked across a border. As long as you remember those 12 words, you can access your wealth from any computer in the world. It is a brain wallet. It is wealth that exists purely as information. No customs agent can seize a thought inside your head. In 2026, we are seeing the bifurcation of Bitcoin. On one side, you have Wall Street Bitcoin, the ETFs held by BlackRock and Fidelity. This is just paper Bitcoin. If the government shuts down the internet or freezes the exchange, that Bitcoin is gone. It has the same counterparty risk as a bank account. On the other side, you have sovereign Bitcoin, held in self-custody. This is the survival asset. When the Canadian government froze the bank accounts of protesters in 2022, they could stop the bank transfers, they could stop the credit cards, but they could not stop the peer-to-peer Bitcoin transactions. In Nigeria, when the Naira collapsed and the government limited cash withdrawals, Bitcoin traded at a 60% premium. Why? Because the people realized that a digital currency that no politician controls is safer than a physical currency that a dictator destroys. However, a survival portfolio is about balance. Gold is for when the lights go out and the internet is down. Bitcoin is for when the borders close and you need to move fast. Gold is your shield. Bitcoin is your teleporter. But you cannot eat gold, and you cannot live inside a Bitcoin. Survival isn't just about preserving wealth, it is about preserving life. You need calories, you need shelter, you need energy. This brings us to asset number 3. It is the oldest form of wealth known to man. It is the asset that Bill Gates, Jeff Bezos, and the smartest money in the world have been quietly buying up while distracting you with the metaverse. They aren't buying digital land, they're buying the soil.
When people hear real estate, they think of a condo in Miami or an office tower in New York. In 2026, those are not assets, those are traps. With interest rates high and remote work permanent, commercial real estate has become a $20 trillion ghost town. If you own a building with no tenants, you don't own an asset, you own a tax bill. But there's a specific type of land that behaves completely differently during a collapse: productive agricultural land. Go back to the Great Depression. The bankers on Wall Street were jumping out of windows because they couldn't afford a meal. But the farmers in the Midwest, they were poor in dollars, but they were rich in calories. They had eggs, they had milk, they had vegetables. They could survive outside the system. In Zimbabwe's collapse, the only people who maintained their dignity were those who could produce their own food. This brings us to a very suspicious trend in the 2020s. Have you noticed who is buying up all the farmland in America? It's not the farmers. It is Bill Gates. It is Jeff Bezos. It is the hedge funds. Bill Gates is currently the largest private owner of farmland in the United States, owning over 270,000 acres. Why would a tech billionaire care about corn and soy? Because he knows the algorithm. He knows that in a currency collapse, the price of an iPhone can drop to zero, but the price of bread will go to infinity. He isn't buying land to become a farmer. He is buying neo-feudalism. He is securing the base layer of human survival. Quick pause. If this analysis is helping you see the economic chessboard clearly, if you are realizing that the billionaire class is preparing for something they aren't telling you about, do me a favor and hit that like button. Now, back to the land. While agricultural land is a powerhouse for survival, it has two major weaknesses that you must understand before you buy a farm. Weakness number one: illiquidity. You cannot put a farm in your backpack. If the collapse turns violent, like in South Africa or Zimbabwe, and you need to flee, you have to leave the land behind. It is stuck. Weakness number two: property taxes. You never truly own land in America. You merely rent it from the government in the form of property taxes. During the Great Depression, many farmers lost their land not to the bank, but to the tax collector, because they didn't have the cash to pay the taxes. This is why asset number three, land, cannot be your only asset. You need the land to feed you, but you need the asset number four to pay the taxes on the land. This fourth asset is often overlooked, but in every single hyperinflation, from Germany to Venezuela, it became the most traded item on the black market. It isn't gold, and it isn't crypto. It is energy.
So you have the gold, asset number one for insurance, the Bitcoin, asset number two for mobility, and the land, asset number three for survival. But you still have a problem. You cannot walk into a grocery store and pay with a slice of an acre. You need something that is liquid, tradable, and holds its value when your local currency is burning. This brings us to asset number four, commodities, specifically energy. In post-war Germany, when the Reichsmark went to zero, the economy didn't stop. It just switched currencies. The new currency wasn't gold, it was cigarettes. Why? Because cigarettes were durable, divisible, and everyone wanted them. They became the consumable standard. In 2026, the modern version of the cigarette standard is energy. Inflation, at its core, is simply energy getting more expensive. When the dollar collapses, the price of oil and gas doesn't just go up, it skyrockets. Owning shares in productive energy companies, specifically those with reserves in the ground, is one of the best hedges against currency collapse. Why? Because an oil company, like Exxon or Chevron, sells its product to the global market. Even if the US dollar crashes, the global price of oil adjusts upward instantly. Their revenue is effectively in hard money, while their deaths are in soft money. This allows you to generate the cash flow you need to pay the property taxes on your farm without selling the farm itself. But what if the collapse is total? What if the stock market shuts down? This brings us to the final asset. Asset number five, foreign hard currencies. Let's go back to Beirut, Lebanon. Imagine two nurses working at the same hospital. Nurse A kept her life savings in the local Lebanese pound. Nurse B kept her savings in physical US dollars under her mattress. When the collapse hit, Nurse A lost 98% of her purchasing power. She was wiped out. Nurse B didn't just survive, she became wealthy relative to everyone else. Her purchasing power stayed exactly the same, while prices around her collapsed in real terms. This is the concept of the lifeboat. If you live on a sinking ship, a failing economy, you don't want to own a better cabin on the sinking ship. You want to own a seat on a different boat. In 2026, if you are an American, this is tricky.
The US dollar is the global reserve currency. If it sinks, it pulls everyone down. But history suggests that not all currencies sink at the same speed. The Swiss franc, the Singapore dollar, or even a diversified basket of foreign currencies acts as a hedge against your own sovereign risk. It is about jurisdictional diversification. If your house, your job, your bank account, and your cash are all in the same country, you are betting your entire life on a single government not screwing up. And looking at the $38 trillion debt, that is a very bad bet. So the survival portfolio is now complete. Gold, insurance, Bitcoin, mobility, land, calories, energy, cash flow, foreign currency, liquidity. But before you run out and buy these, you need to know what you must immediately sell, because there are 3 assets that millions of Americans hold right now, thinking they are safe, that are statistically guaranteed to go to absolute zero.
Now that you know what to buy, you need to know what to sell immediately. There is a misconception that in a collapse, risky assets like tech stocks go to zero, but safe assets like government bonds stay stable. History shows us the exact opposite is true. In a sovereign debt crisis, the safest assets are the ones that kill you. The first casualty, fixed income, bonds. Your 401k, your pension fund, and your balanced portfolio are likely filled with government bonds. What is a bond? It is a contract where you lend money to the government, and they promise to pay you back in currency. But remember Chapter 1, the currency is being destroyed. So if you hold a bond, you are a creditor to a bankrupt state. In Weimar Germany, the people who held government bonds were wiped out completely. The government paid them back, yes. They paid them back in worthless marks that couldn't buy a newspaper. In Argentina, in 2001, bondholders took a 70% haircut on their principal. In 2026, holding U.S. Treasuries isn't risk-free return, it is return-free risk. You are guaranteed to get your dollars back, and those dollars are guaranteed to buy nothing. The second casualty, savings accounts. We touched on this in the intro, but let's look at the math. If inflation is 15%, the real number, not the CPI number, and your savings account pays you 4%, you are mathematically losing 11% of your wealth every single year. You are like a frog in boiling water. The number in your bank account stays the same, so you don't panic, but your lifestyle is slowly evaporating. In Lebanon, people who kept their money in the bank lost 95% of their purchasing power in just 2 years. They waited for the government to fix it. The fix never came. The third casualty, variable rate debt. This isn't an asset, but it's a liability that can go to infinity. If you have credit card debt or an adjustable rate mortgage, you are short the currency. In a collapse, interest rates don't stay at 5%. They go to 20%, 50%, 100% to try and stop the bleeding. If you have variable debt, you will be liquidated before you even have a chance to buy gold. The lesson? The people who get wiped out in a collapse are the creditors, people who hold cash and bonds. The people who get rich are the debtors, people who borrowed fixed-rate debt to buy real assets. If you borrowed money in 1922 Germany to buy a factory, the inflation wiped away your debt in 1 week and you kept the factory for free. Wealth is transferred from the saver to the borrower. It is unfair, it is immoral, but it is the rules of the game. So where does this leave us? We have the 5 assets, we know the traps, now we need to put it all together into a final strategy, a plan that you can execute tomorrow morning.
We have covered 100 years of financial history in 20 minutes. We have looked at the autopsies of dying currencies and found the survivors. But knowledge is potential power. Execution is real power. So how do you construct this portfolio? You don't put 100% into Bitcoin, too volatile. You don't put 100% into gold, no yield. You don't put 100% into land, illiquid. You build what is called a barbell strategy. On one side of the bar, you have extreme safety. This is your gold, your productive land, and your foreign cash. These are the assets that ensure you survive no matter what happens to the dollar. They are your shield. On the other side of the bar, you have extreme upside. This is your Bitcoin and your energy stocks. These are the assets that catch the wave of inflation and make you wealthy when the currency debases. They are your sword. What you avoid is the middle. You avoid the safe bonds. You avoid the savings accounts. You avoid the passive index funds that are propped up by printed money. Because when the storm hits, the middle is where the ship breaks. The $38 trillion debt clock is not slowing down. The signal from 1929 has flashed. The math is inevitable. But remember this, a collapse is only a tragedy for those who are unprepared. For the prepared, it is the greatest opportunity of their lifetime. In 1923, the people who understood this bought Berlin for pennies. In 2026, the people who understand this will buy the future. The doors are still open, the transfer has not yet finished, but the clock is ticking. History has given you the blueprint. The rest is up to you. I want to know where you stand. In the next 5 years, if you could hold only one asset to protect your family, gold, Bitcoin, or land, which one would you choose and why? Let me know in the comments below. I'll be reading the best theories.